You're looking live at the Nasdaq. Are we having fun yet? 9 consecutive days in a row. It's been trading higher. Good for the Nasdaq. It was up, 10 points today, 0.8 tenths of a percent, and closed at 13,000. What is that? 650. All righty then. What I'm most important to me here is this next level of 13,714. I'd like to see it get above there and start making some new highs. I mean, I'm not going to, this is a nice move here, this little V-shaped pattern. I'm not going to take that away from it, but, I want to see it start making new highs. A couple other things I want to see in the NASDAQ. I'm going to go to the weekly here and just point out, like, take a step back and a larger, picture of since the top in November of 2021, which is roughly 2 years ago. It made the bottom in October of 2022 and has now rallied back up. Had this 3-month pullback, which was about 12% in duration, and came back to the 40-week line there. I do believe that's my 40-week line. Please help me. Yeah, 40-week line. Okay. So anyway, found support there, and now it's moved higher the last couple of weeks. But you can see this kind of a cup with handle pattern. If you're a bull, you're going to say, "Oh, that's a great cup with handle pattern." But it's got to make new highs, for me to get excited. And the first one here is 13,714. I did want to point out some positives here, in that the 10 EMA is now crossed over the 21, and it looks like it's going to burn through the 50 here real quick. And the 21 is curled higher too, and it looks like it's going to trade above the 50 here. If it continues, it doesn't have to go up every day. It can go sideways as long as it doesn't get slammed down. These shorter term moving averages are going to cross above the longer term 50, but it's 1.7% above the 50, I believe. 1.7% above the 50. So this has made a nice run, because back here it was 6.5% below, and now it's 1.7 above. So that's a key technical level showing strength. The shorter term moving averages are curling up, and this looks a lot better since November started. I am a big believer in seasonality, and those 3 months of trading lower of August, September, and October, it was just brutal to go through. I mean, but we endured it, and now we're getting, we're stepping on the gas here. We stepped on the gas when it was in the power trend here. Hopefully you shut it down, tapped the brakes, and coasted on this little 12% correction. And now we're stepping on the gas again. Not quite as hard as when we're in a power trend, but we're getting there. I've increased exposure to about 65% in my trading account. So getting there. I want to get to 90 or 100 here once we get in this power trend that I am anticipating. Not predicting, I am anticipating. Apple, whoops. Sorry about that. I want to show you the Russell, because I made a mistake of, here's the Russell down again today, 3 days in a row. I mean, I would like to see this thing, find support at moving averages and start bouncing higher. But if it doesn't, it doesn't. I'm not trafficking in these smaller cap stocks right now. I want the larger liquid names. Those are being bought, kind of like a flight to safety type of deal right now. But hopefully the rally broadens out and these smaller cap stocks start to participate. They're not right now, but I did say this. There was a correlation between the 10-year and the IWM or the Russell, and there's not, because this thing keeps going down, and so does the Russell. So at some point, I'm expecting the Russell to stabilize and start trading higher. But definitely for the growth stocks, though, this is helping. It's not hurting for sure. We need this thing to go down below 4 or 5, but we'll see what happens. Anyway, I'm going to move to Apple, since I said I was going to go to Apple. Now, there's 7 of the Magnificent 7 stocks. There's 7 of them. There's only 4 that I like, 2 that I don't like, and 1 that I'm just And this is the one that's just for me, Apple. It made this correction while the market corrected. Now it's rallied back through, kind of like the Nasdaq. It did make the high above the 182.34. So it's making the higher highs, but Yeah, it's just kind of stagnant for me. I will say, in Apple's defense, they had a pretty lackluster earnings report, and the stock didn't go down on that. It kept trading higher. So that's always a bullish sign when a stock can go up on bad news. I wouldn't say the report was bad news, but it wasn't great news. And this is just okay for me, consolidating in a base, and it's just okay. I think you can do better. How can you do better? Well, you can buy Microsoft. Not right now. We had it on our ready list last week around that 340 level, but it's getting a little extended right now. And yeah, right through there. But now it's been up, I don't know how many days in a row. I can count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So what 13 out of 15 days or something like that. But anyway, it's getting a little extended. What you want to see is it come up to like the 365 level and just kind of pull back here and form a little bit of a handle. And then it can take off. Yeah, shake some people out. That's what it's going to do here. I'm convinced. Anyway, I like Microsoft. That's a nice chart. Meta is another one. This is a beautiful chart right here. You can see the prior uptrend. I always got to have a prior uptrend for me. That's just my style. Then consolidation for 3 months. This is a thing of beauty here. Undercut the 50 and then rallied right back through. I mean, that's what you want to see. Is it can be down there for a day or two, but it's got to jam right back through it. And now it's trading tight. You can see this tight trading here. There's small daily ranges, and the volume is drying up. This looks very good to me. But who am I? You might see it on our ready list sometime soon. That looks very constructive to me. Amazon, this one it undercut its 50, stayed down there for a long time. And then right before earnings, it pulled back to its 200, then just rammed right back through it. It's been up, I don't know, 8 out of the last 9 days, 9 out of the last 10, down 50 cents today. That's a nothing burger. But anyway, it's allowing the moving averages to catch up. And you can see this, the RS line went above its industry group and S&P 500 21-day moving averages. So yeah, so it's outpacing its industry group and the index. So very good for Amazon. So I said I like 4 of them. Oh yeah, the other one was NVIDIA. So Apple's meh. These 4 are nice. It's a nice double bottom pattern. And I know, traditionalists want to wait till 476.09 till it gets to the standard buy point, then pulls back a little bit. But I kind of like to get in a little early. You can see the volumes drying up here. NVIDIA looks really good to me. They have earnings on the 21st, so that might appear on our ready list as well. Okay, and I said there's 2 that I don't like. One is Tesla. Tesla's just doing nothing. I mean, it's sliced its 50 and like Meta rammed right back through it. This thing just kind of lollygagged below the 200 like it doesn't have a care in the world, just meandering, floundering around the 200. Anyway, I do not care for a stock that's doing that. My stocks need to move. You can see the RS lines are just going straight down. Sorry. The other one was Google. Google, this one sliced its 50. Like I said, Meta went right back through this one. It came down to the 50 to just sliced it. Now it's going up, but there's no power in this move. Moving averages are, the shorter term moving averages are curling down too. So the 50s curling down. This looks bad. Anyway, yeah, Adobe. I'm gonna say the Great 8, not the Magnificent 7. Adobe looks fantastic. Made a new high today. Unfortunately, I'm not in it. Why? Because I'm a dummy. But you can't kiss all the babies. I'm happy with what I've got right now. 570 though, that's definitely above that. It was a nice move, $15 move above there. So this one looks very good, Adobe. And that's it for the grade 8. I want to move on. I'm going to take you down that negative road, which is not really negative, and then bring you back on the positive track. And the oil and gas stocks are dying, and I'm thrilled to see it. Not that I'm a hater or anything, and not that I'm one of these liberal dudes who hate oil. It's just that when these stocks go lower, I mean, when they go higher, it puts pressure on the growth stock. There's an inverse relationship, and I like buying stocks like the ones I just showed you. And I do hold these stocks because last year they were only a game in town, but if they're going to go lower and the price of oil is going to go lower, there's no reason to hold on to these things. And if they're selling these things, they're going to be buying some of our other stocks, like our software and semiconductor stocks, and the technology stocks and growth stocks. Which that's how I make my money in a trend trading growth stocks, and not these oil and gas stocks. Chevron's, they spent a lot of money buying Hess, and the stock sold off. Also with the price of oil, that was just a double dip, a 1-2 punch that really hit Exxon and Chevron. Exxon bought Pioneer for, I don't know, an ungodly amount of money. But yeah, these things are weak. And these aren't the only ones. Tidewater reported this is a field services stock. Sliced its 50 with volume today, down again with volume. Not really, though. It's just flat. Weatherford, some people own this one, I know, and they said, when they slice the 21, they're usually going to go to the 50, and today it sliced to 50. So this is adios muchachos for me. Let me see here. OII. Oh yeah, this is a little bit ahead of the oil and gas stocks. It sold off, went down to the 200 quickly. Like I said, you want to see if it does go below the 50, you want to see a rally back. And this one went straight down to its 200. The slob, which one? The slob, SLB. You moron. SLB. Yeah, sliced its 50 and went down, to the 200. So this is a good thing for me. I mean, for the stocks that I traffic in. So, like I said, I'm not a hater. I'm just when these stocks go higher, like the XLE was the only game in town last year, so we played it, right? And these things have had a heck of a run since COVID. That's a big move. And now this is the move last year, and from the whole year, I think the XLE was up 50%. It's the only game in town. Now when it's going sideways, still consolidating within a base, but you could see a lot of the stocks are trending down, as I just showed you. Anyway, I'm going to get out of the oil and gas stocks, and like I say, I'm not a hater. I'll buy XLE and oil and gas if they're trending higher, but they're not right now. They're going lower, and that means other stocks are being bought. Like what kind of stocks, Marty? Well, like the cybersecurity stocks. CrowdStrike, this is a growth stock with nice growth profile here. Triple digit earnings growth, 37% sales growth. You want to take a look at their balance sheet, cash flow, return on equity, up down volume 2.1. The stock's being bought, it's in demand. Accumulation distribution rating B+. You can see these big blue numbers, and that's what drives liquidity to the stock is earnings growth. Growth investors like growth stocks. They want earnings and sales growth. So when you hear people saying liquidity is coming out of the market, no, it's not. It's just going to the stocks that deserve it. And CrowdStrike's one of them. Zscaler, man, I believe I had this on our ready list. I don't have that in front of me right now. Excuse me. But anyway, this stock is still actionable, I believe, even though it's showing strength. Once again, triple digit sales, earnings growth, and 40% sales growth. That's powerful. 1.4 up down volume, B+ accumulation distribution. Doesn't have the cash flow like CrowdStrike, and I prefer CrowdStrike, but Zscaler is strong as well. Those two are showing well, and also QLYS. This one gapped higher on our earnings last week. I believe I had it on our gap. I don't have that list in front of me either. I'll go over this on the weekend, but it was up. There you can see more than 11% with more than 200% above average daily volume. So it's definitely a power earnings gap stock that I'm going to watch because I like those stocks like Palantir and DraftKings and DoorDash. I went through a bunch of them last week, and I'm not going to do it now. Okay, what other stocks, Marty? Come on. The drug stocks, of course. Eli Lilly today got approval for hang on now, one of its diabetes drugs as a weight loss drug, I believe. That was the news. Anyway, I wasn't following it that closely. I just technically, the stock is since the gap higher here is making higher lows here and then higher highs. So I expect it to make a higher high above 629? Of course I do. When? I don't know. But this is the reason why I pay attention to, this 15% essentially gap with over 400% above average daily volume. And back then, this thing was trading around what, 502 to 538, and now it's at 619. So and they reported strong earnings last week. You can see the big volume coming in. If you look at the weekly, big blue volume bars, the above average bars are blue, except for this week right here. And if you look at the monthly, this thing's been a beast for a long, long time, since the financial crisis. So past results do not guarantee future production, but, the stock doesn't know you own it, and it's, probably going to continue its trend, and the trend is higher. Same with NVO, same thing. These two are carbon copies. This is not quite as strong as Eli Lilly. It's still trading close to what I would call, an actionable buy point here. 2.4% above the 10 here. It came down and bounced off of it today. When Eli Lilly had the good news, Novo went down and then hit this 10 EMA and got bought right back up. But I like this thing right at $100, 188 cents. That's fine. And I can just go to the monthly here, and this thing looks like like Lilly since 2008, but this goes back even further, and it has about 100 billion lower market cap than Eli Lilly. I'll go in depth on those two one of these weekends, but not today. Just wanted to show that this one is what did I say, 2.4, and Lilly is stay with me here, 5.5% above its 10 EMA. So that's why I say that Lilly's a little bit stronger. It's above its moving averages, but they're both beautiful stocks. TGTX is another drug stock that I like. Why do I like it? Well, it formed this base down here. It sold off miserably. It had this short cover rally that took it to 35, and then it formed this little base below 12, even came down to 6.5, and then it blasted out last week, like 59%, something like that. And then now it's forming this short stroke pattern here this week, which is an add-on buy point here. I'm full of myself with this one. I'm not going to add to it, but yeah, 59%. Now it gives back 2%, 2.4%. Yeah, that's a short stroke pattern. It's got a couple more days, but it looks good to me. TG Therapeutics, it's a spec play. Believe me, this is not for the faint of heart. That thing moves, and you can see the big up move, right? I mean, if you're trending this way, this is great. And if you're trending this way, it's like, oh no, that is horrible. But anyway, I'm going to move on to the software names. Another stock that's been on our ready list is ServiceNow. This one looks fantastic. You can see the relative strength line blasted through the the index and the group 21 day, and this thing is just powering higher. A leader in the software name. Datadog, we know it had a big earnings gap on Tuesday. And just get back 2% today. And when you go up 28.5%, you can give back 2%. That thing looks pretty good. You got to go to the weekly chart, and this is consolidating here in this base back since August of 2022 is $120 stock, and now it's sitting here at 99. This is still, I would consider that a stage one base. So it has more work to do. And it's going to offer more opportunities. Datadog, I like Datadog. Okay, Wix was strong today. Had a nice move. Once again, got to go to the weekly. These things have been consolidating for a long time. Wix goes back to December of 2022. So it's been a year of just doing nothing, going sideways. So definitely a stock to watch. I don't own it, no, but stock to watch. Palantir, again, had the earnings gap. 20% with a 200% above average daily volume. Now it's just trading sideways, allowing the moving averages to catch up. That one looks good as well. You could note the RS line there, just showing strength. Anyway, I'm going to go to retail because I love retail, and Deckers is one that gapped higher on earnings. Was it last week or the week before? 19%. With 377% above average daily volume. The high that day was 585. So you say, oh man, I'm chasing it here. Not really. Now today was at 630, right? 634. So that's why I pay attention to these earnings gaps. Where else was I going? Oh, Celsius. This one has been trading really funny. They reported a really strong quarter, and I'm not a hater. People on Twitter saying, how do you like Celsius now? I like a little better than yesterday. Why? Because yesterday it was below the 50. Today it's above. But I don't like it that much because it's still a 50 SMA is trending lower. Okay. These short-term moving averages are trading higher, but I want to see them get through the longer term moving average before I get interested. And if Celsius does something like I think it's going to do, just kind of, lollygag higher, just kind of float higher, get to 200, then pull back, then I'd be more interested because these moving averages will be, stacked a little better. But right now it's trading really wild for me. It's got to calm down, but I don't hate it. I love the product. I'm drinking it right now. People just want to give me a hard time on Twitter. That's all. Please don't do that. AEO. American Eagle Outfitter. This one, it's got a very consistent pattern where it pulls back to its moving average every time. It goes up, it pulls back, it goes up, it pulls back. Very consistent pattern. So you don't have to chase it up here because it's going to come back. But if the longer trend, it's higher and higher prices, right? Higher low, higher low, higher low, higher low. So this is one classic buy the dip stock because every time it dips, it goes higher. They have earnings next week or the 21st as well. Abercrombie and Fitch, this is a trend trader's dream. Now it has, gapped up here in November and here in May and here in August. And so, it's done it quite a few times. So you got to be aware of that, but it is showing strength, making higher lows. You talk about buying the dip, every time it dips, it just trades higher. So just higher lows the whole way. And of course, higher highs as well. So Abercrombie and Fitch is just a killer stock. I love that stock, but I don't own it. I don't. Deckers is the only retail stock I think I own right now. Wingstop, this one, symmetrical cup-shaped pattern, had a nice ramp there. I believe that was an earnings ramp. What was it last week? November 1, which is last Wednesday, I want to say. Anyway, yeah, nice move. 7.5% with volume. Got to look at the weekly chart. Always take a step back, look at the weeklies. Very nice. Says stage 1 base because this base undercut the prior base, so it resets the base count. But you can see it's been basing and trading higher. So Wingstop is definitely it's making me hungry. And there's football season and Wingstop, they just go together, don't they? Anyway, that's it for retail. I'm just going to take a random walk now through some stocks showing strength that I just jotted down. This is INTA. You say, well, how can it be showing strength? It just got above its 200. Yeah, it was up 11% today with volume. So that's why, I noted, take note of a move like that. That is above 100% above average daily volume. So that one is showing some strength. Take note, stocks up on volume. This is MSI Motorola Solutions. I think it gapped higher on earnings, 6.5%, and just continues to trade higher. Traded at a 52-week high today. AXON, the former Taser stock. This is a model book winner stock back in the day. They have some different products now, and today ramped higher. I believe that was an earnings ramp of 6%. So congrats to the longs at AXON. CDNS, this is a semiconductor design stock. So when these stocks do well, the semiconductors are probably going to be right behind them. And Cadence made a new high today. Synopsis is another one in this group that made a new high today. These look very strong. They've been on our ready list before, but they're gone now. Bentley Systems is one that I had on my list, but it's just floundering. I mean, the tape is so strong right now, you don't have to mess around with stocks that can't get out of their own way. But it is setting up, and I do keep my eye on Bentley Systems. But it is the also ran in the stocks in that group, as you can see. Those other two are just kicking ass. DraftKings, sorry for the French. This is a gap higher on earnings last week, and this continued higher. And this is why I say, when you buy on an earnings gap, you're not really chasing because, companies, firms, institutions are expecting, some type of earnings and they exceed it, and then they raise guidance. So they have to rejigger their models and say, well, this stock, we thought it was worth 30, but now we think it's worth 40. And so they put a buy rating on and raise their price targets. You know how the game's played, but definitely this one is showing strength, as evidenced by that RS line just powering through and going due north. All right, that's it for me tonight, except for I do have a couple of things. In the honor of the great Steve Jobs, I want to go through a couple of earnings reports tonight. I'll have more in the morning here, but Disney looks good. Twilio, I mean, every stock that I was checking here was up. Affirm was up. HubSpot was up. There's Affirm up 10% on Affirm. IONQ, that was up barely. And then the one that I like is Duolingo, and it's up. It was up 180 earlier. Okay, 6% move. We'll take that. That looks very good to me. And you can see this double bottom pattern here, just kind of meandering, but above that 168, that's definitely an area of interest. But congrats to the longs. I wouldn't be chasing it up there at 180. And like I said, in honor of the great Steve Jobs, I do have one more thing, and that is, I talk about power earnings gaps a lot, and we got one today with Roblox, and it had all the qualifications. It was up nearly 12% with 537% above average daily volume. But this to me is a no-go. Why? Well, because it closed with an inverted hammer there. You can see near the low of its daily range. So this is, to me, this disqualifies this one. Now watch it go up to 50 tomorrow, but I don't, it should close near the end of the day. People should be buying it, wanting in this stock and clamoring for the stock, but no, they don't want it. It closed at 4% of its daily range. And if you take a look at let's just check a 5-minute chart. Yeah, gaps higher, and they're just going, I'm out of here. I'm going to take profit. See you later. Goodbye. They just sold it off. I think it even looks worse on a 1-minute chart. Like, yeah, I'm out of here. So it's up, 42, and now it, closed, below 39 or something. So that's, sorry. Yeah, 42.20, closed at 39.22. So that, no thanks. I just wanted to point that out, that not all earnings gaps that are more than 10% with more than 100% above average daily volume, they're not all the same. This is a different animal here, and I just stay away. And speaking of staying away, I've been telling people that all these IPOs that are coming, not all of them, but a lot of the IPOs that are coming out are way overvalued, and to stay away from them. And this is ARM Holdings reporting tonight. This thing, NVIDIA was going to pay $40 billion. They offered $40 billion for it. This thing came out at $60 billion. And then it sold off, and now it's at $55 billion, which is still $15 billion more than what NVIDIA wanted to pay for it. I don't know what Wall Street's going to value this stock at, but it's going to be less than 50, I believe, in the coming days, and it'll find its own valuation at some point. But they reported earnings, the stock is selling off, and just a lot of these IPOs coming to market are overvalued, and the underwriters are just being a little too greedy right now on most of them. Not all of them, but most of them. Anyway, that's it for me. Thank you for watching at mcstockcharts.com. I'll be back in the morning, have a lot of stocks looking good on the ready list, and we never give up. Thank you for watching.